So the whole concept of the FTR strategy is zone to zone targeting. I draw this up at the start of every video that there is. H4, H4, H4. We're going to pretend that the market is in a downward move. We're now in the middle zone. We can either push up and lead back to this order block, or we can press down and lead to this order block. So that means when we're on the M15, if we can watch the market slowly climb its way back up after aggressively rejecting a particular area, if we can get a pattern or something which indicates that the market's going to drop, then we will feed it essentially from this area down to a bare minimum of this, preferably get a break of structure on the H4. So, target 1 ideally here, and target 2 would be the next one because that would make sense for the H4. Now, if you look on the chart to try and do that, it's really quite simple. Again, you can do this just by looking at the line chart and think, all right, where are the support and resistance zones? Where's the supply and demand? Just go to the areas which are constantly being touched and you can see where these zones are, okay? It's really simple. We're just using pretty much a standard retail pattern, but we've just made sense of it a little bit better using more confluences, okay? So the reason why these are important, like the old taps don't really matter that much, but it's the aggressive areas newly placed on the chart, okay? Everything to the right is more important than what happened on the left, but if on the left it hasn't been touched yet, that means that it's then relevant, okay? But we try to base everything based on most recent price action. For example, where price has got to on here, the most important zone which we would be looking at is this. It's unmitigated, or it's not being touched yet until price came to it. And also the other area which we're looking at really as a target, that has not been touched because there's imbalance below, or a clear drop. And then there's up here as well. So if price was to break out of here, first target would be here. We'd look for a passing through of this to feed into the next one. Also, if price came up and rejected from this, so for example, on like the M15, if we got a move like this, we would essentially look to feed it down to at least here. And if not there, it would probably be down to this place, okay? So looks like it's going to be a far run. Let's just click continue and see what happens. Literally happened. So perfect, okay? So hopefully that's making a little bit of sense to you. The reason why we're using the 2 timeframes is that there are 16 M15s within a 4 hour. Okay, I know it sounds really simple, but the 4 hour you can predict quite well because it literally just fills up the imbalances, and when it doesn't refill an imbalance, it heads to the next zone. Okay, but what we're trying to do is we're trying to drop our stop loss from what would be on EuroCAD of say like 25, 30 pips on an H4 down to about 5 pips on an M15, but target the H4, the next H4. So instead of us getting, 25 pip stop loss with a 50 pip target, we're doing a 5 pip stop loss with a 50 pip target, getting a 1 to 10 instead of a 1 to 2. All right, hope that makes sense.